Hi everyone, I guess this is the time for us to jump in with the UK data release. Today we are discussing the UK second estimate GDP, which will be out in about 10 minutes from now, and me and my colleague Michael, hi Michael, we will cover this data for you. Once again, I would like to remind you that the topic is actual because GDP is the broadest measure of economic activity and the primary gauge of the economic health. As you can see here on my screen, at the current moment the forecast stands at 0.7%, while the prior figure stood at 0.7% as well. Talking a little bit more about the historical movement of the indicator and the projections, I will remind you that the UK's economy grew 0.7% in the second quarter, being 2.4% year over year, following a surprisingly weak 0.4% in the first quarter. Today's second estimate is expected to be unchanged at 0.7%, as I said previously, while the upward revision of the US GDP could lead to last-minute expectations that the UK data is revised higher as well. Most interest will be directed toward the publication of growth contributions. Fast economic growth and financial flows have notably strengthened the GBP over the past couple of years, which has hurt manufacturers. Pound is now almost back to pre-crisis levels against the euro, but during the ending of the week weakened a little bit. Weakness in key export markets and a strong currency have left consumer and government spending responsible for the growth. As always, we have our expert projections on the estimates, and according to their views, we have the Bloomberg survey summary, where the medium estimate stands at 0.7 and average estimate also stands at 0.7. High estimate and low estimates are as well at 0.7%, while the total number of estimates has reached 30 this time. And slowly turning to the Dukascopy community members' sentiment, we can see that this time the members were rather bullish on the matter at 60.22% versus 39.78% bearish votes. So here you can also see a couple of comments by our community members. As you can see, we have a bearish and a bullish comment, and I would like to read you both of them. So Sickman says that primary applications for unemployment benefits amounted to $271,000. The price index for personal consumption expenditures, 2.2%. Annual data on GDP, 3.7%. The price index of domestic acquisitions has also increased by 2.1%. That's why he expects the growth of the pound USD currency pair. And another who was bullish, it was Khalid. He says that UK second estimate GDP is expected to be the same of 0.7%. If the expectation is true, then data power will be lost and the pound versus the dollar will go lower as effects of dominant bullish US dollar after strong GDP of the US, which released yesterday already and exceeded the analyst expectations. Still seen pound versus dollar bearish after data release. And since I don't have time anymore, I would like to give the floor to Michael, who will cover the technicals and the initial reaction of the market. Michael, the floor is yours.
Hello guys. 1 second. So for today's data release, I've chosen the cable currency pair and the negative surprise trading strategy. As you can see, the reasons for that is that the GDP itself is expected to remain flat, but the preliminary business investments that is due at the same time could still influence the pair and move it to the downside. So the sentiment, of course, for the pair is bullish, currently at 51.04%, with the sterling being sold in only 45.88% of all cases, and the US dollar bought in 50.61% of all cases. So the betting orders are also quite close to the equilibrium, slightly on the bullish side, with 52.50 in the 50 pip range of all orders to purchase the sterling, and 51.02 in the 100 pip range also to buy the cable. So the market sentiments of other market participants are also all of them bullish, with the Orlando having 55.48% of long positions, and the Saxo Group has 52.26 traders holding long positions, and the daily FX has also a bullish sentiment of 64%. So if we look at the market reaction table, we can see that the data mostly met expectations, with exception with the last release on the 28th of May. It didn't meet the expectations, and it also had the largest reaction of 31 pips, probably because there was also some other economic event at that time, another release, because before that we only had a 7 pip reaction. But nonetheless, the approximate average we could expect today is around 18 pips. It's not a really large reaction, but it's still something. So based on this reaction, I set the take profit and stop loss levels at around the take profit around 153.82. Unfortunately, we don't have any other significant level to reinforce this one. So in case the data is actually worse, we might see a decline even further, while the stop loss level is located at 1.5420, and we somewhat have the 200 period simple moving average close by, also the 20 period simple moving average, and maybe somewhat the daily S3 slightly above, so that is altogether a quite strong resistance cluster. And in case we actually do see improvements in the GDP, then we'll probably see the sterling rise to this point. Also, however, we can see the shorter period simple moving average closing in on the longer one, so it will definitely attempt well, not definitely, but most likely attempt to cross it to the downside, which will be a sell signal, suggesting that the pair will go down. And also to back this up, we can see the technical indicators, which are actually giving us bullish signals in the bearish signals in the 10-minute time frame, also bearish in the 30-minute one. The hourly ones are kind of bullish, and the 4-hour ones are also bearish. The daily ones remain mixed, and the weekly ones are also bullish, and the monthly ones distinctly bearish. So, but the most important indicator is the 30-minute time frame indicator, since it was updated specifically for the current date release, and it is giving us bearish signals. So, contradicting with the sentiment and with all the pending orders, suggesting that the pair will go down and actually supporting the strategy that I've chosen. So we have like 40 seconds, even less, 10 seconds probably left until the data is released. We could slightly maybe adjust the take profit levels 5 pips to the upside, since the current price has changed. The take profit and stop loss levels, like so. And yeah, the GDP has actually met expectations. And if I could please have the preliminary business investments data posted as well, if that's possible, but probably not. And Yeah, since we see the GDP meet expectations, the pair is rising to the upside. So I was incorrect with choosing my strategy, although several signs were showing that the pair would decline, but we didn't even reach the stop loss level. The pair has still went up 17 pips, so almost as expected with the reaction. Oh yeah, and we have the business investment data that is actually a lot better than anticipated. So this is why we see the cable rise to the upside instead of going to the downside. So this is the decisive factor that made it reach the stop loss level right now. So I guess that sums up today's data release, and we'll have another one at 12:30 p.m. GMT. So tune in on that, and also the research webinar at 12 p.m. GMT. So see you then, and back to you, Kate.
Thank you, Michael. So yeah, guys, once again, the data came out in line with expectations of 0.7%. We saw that the cable rose, and then which is a good indicator, I guess, for the UK's economy. So see you at 12 GMT for the research webinar and another data release. So bye for now.